and how you should build your portfolios, let me welcome Harshal Dasani, Business Head of Invest at PMS. Harshal, good afternoon. Today the market sentiment has revived quite well, but we have seen the rupees fall to a lifetime low. While we were expecting that the worst is over for this local currency, but once again, we are at a fresh lifetime low. What are you making of this?
Good afternoon to everybody. And yes, absolutely. If you look at the USD INR, it has been inching higher and higher every day. It has been right now somewhere close to the 90 levels. But if you ask me, I don't look at it as the dollar strengthening, but I rather look at it as I look at it as the problems that are lying with India right now. So the major thing that I personally see is the India-US trade deal, because of which the USD INR has been really inflated. If you look at our foreign reserves, they're all set. We've been buying crude oil with rubles and yen, so we're not even shedding out a lot on dollars. But the major reason for the USD INR rising up, I think, is because of the uncertainty that has been lying on the India-US trade deal. And once we see this uncertainty settling up a little bit after the India-US trade deal is announced, we'll see the USD INR cooling down a bit. So I think more than a structural run in the USD INR, it's more of a sentimental driven run and should cool down with the India-US trade deal flowing ahead.
Okay, India-US trade deal. Yesterday there was a phone call conversation which took place between US President and Prime Minister Narendra Modi. But you were mentioning it's been 9 months since the deal overhang has been weighing on the sentiment. How should traders
Yeah.
approach this scenario? Because if you look at from the FI flow perspective, this month itself, FIs have been on a sell mode. They have sold stocks which was worth about 16,000 crore rupees. What's the way ahead?
Hmm. Hmm. So, absolutely, there was a phone call between Modi ji and Trump yesterday. But you see, the India-US trade deal, which is not getting signed, is not majorly stuck because of the procedural delays. If you technically track it, it is majorly because of India's strategic alliance with Moscow, and now also we've started strategically aligning with Beijing after 7 years of long-standing that we had with them. So it is not going to be that easy for India to sign the trade deal with US. And I think the only condition where I see this trade deal signing up or speeding up is when if India is giving a very favorable and a very sweet deal to US, where we are giving them open access to our markets for all their companies and the agriculture thing that they have been very wanting about. But looking at India's current alignment, not with West, but rather with Beijing and Moscow, uh, it's going to be a little difficult for the trade deal to get signed. Though we are in talks for the last 9 months, over the time we have seen multiple times that the talks have been going ahead, but no fruitful outcome from them. So I think that the problem is not in procedural delays, but I think the problem is rather in our alignment with the partners that we're choosing. So I think even the markets, if you look at, there has been a lot of fatigue in the domestic markets as well as the USD INR for a very long time. The USD INR has been inching as we spoke before. And even if you look at the domestic markets, Nifty, you look at any global market, you talk about Nikkei, that is Japan, you talk about Kospi, that is South Korea, you talk about Dow Jones. Everybody is running and making a new high. The only markets that are stuck is India. And I think the only and only overhang that we have currently in the market is the India-US trade. And once the deal sails through, I think the market would start doing better. But it needs to go ahead positively. And for that, going to take some time.
Okay, it's going to take some time. Harshal, what about the global fund houses? They've been releasing their 2026 outlook, where they expect Nifty to see about 10 to 11% rally from the current levels. What's your assessment and what's your outlook going ahead?
Well, if you ask me personally, I think Nifty is also ready for a grand slam run. Like if you look at all the global parameters and if you look at the domestic parameters, everything is falling in place. So if I talk about the global parameters, India is getting closer to Russia like it has got never before. For example, the relationship between India and Russia is like it was never even at the time of USSR. You talk about India and China getting closer like never before in the last 7 years. India has signed a free trade agreement with UK. You talk about crude has been below $70 for the entire year. And even if you look at the Fed, it has been aggressively doing rate cuts. So we are sitting on a pool of liquidity on the global terms. Now, if you talk about the domestic side, I personally feel that RBI has done a phenomenal job with the rate cuts. RBI did a 50 basis point rate cut in June, followed by a 25 basis point rate cut in December. Uh, the quarter three, I think it's full of festive seasons, and India being a consumption driven economy is going to benefit a lot out of it. We also had the tax cuts and the GST cuts back then. So I think domestically also the mutual fund inflows are at its peak. Domestically also, I think domestically and globally, we are all set for a grand slam. The only and only negative parameter, as we spoke before, is the India-US trade deal because it has now more than uh, more than the parameter, it has become more of a sentimental thing. And until the India-US trade deal is not getting seen, the markets are getting stuck. They are just looking for that volatility to get low. See, I think markets they don't have a problem with bad news. They accept the bad news, they move. But the real problem is with volatility. They don't like uncertainties and volatility. And it has been, I think, what, over a year now that we are still figuring out what is going to happen on the India US. So, global parameters, domestic parameters, we are all ready for a grand slam run. Just the sentimental parameter that is the India US trade deal, it needs to fall in place. And I think we're all set. So, yes, I do agree that the markets look bullish for the next. The outlook is bullish.
Okay, okay. Let's scale back to the latest Amphi data because that showcased two highlights. First, the SIP inflows have moderated, and secondly, the flexi caps, which used to be the street favorite and saw aggressive inflows, have seen quite the moderation. So, any key takeaways from here?
Yes, I do agree. See, right now we are in the third leg of the rally. This rally had started post-COVID. So we had the first leg of the rally followed by a consolidation for in 2021 and 2022, after which we had the PSU rally that came in. And for the last 1 year, we have been consolidating. Now we are about to break out from the third high. We are about to break out and we are about to move higher. This run is going to be a lot more quality driven. It is not going to be a run in which you will see your Suzlon or maybe Reliance Power moving up. This is not going to be a run in which all the junk is moving. Here, the investors are going to prefer quality over the momentum stock. So I think it is very important to rather look for those stocks that are consistently performing, not only in terms of fundamental, but they also have growth parameter or a tailwind in their field. So I feel that personally in this third run, it is not going to be easy to make money as it was in the first and the second one. You need to spend some time to find those quality balls, and then you need to place your bets upon them for making those returns. So it is also the thing that you mentioned about the SIP inflows are going down. Well, this is a classic case of retail behavior that we generally observe. See, markets have not been performing really for the last 1.5 year, and people are really tired. You see, the Nifty is standing near the all-time high, but if you look at the broader markets, right, the the buying breadth is missing in the broader markets. You don't see. You look at the small cap index. The small cap index is trading around 8-9% away from its all-time high. So people are really not understanding what's happening around. And this is the reason. See, people used to pour in money into SIPs when the markets were moving. But when markets stop, people tend to reduce their SIP amounts and tend to, cautiously flow the money. But I think it is nothing to be worried about. We're sitting on tons of money. And once the market breaks out from its all-time high or once the India-US trade deal is signed, any positive development, we'll see the SIP inflows coming back to normal.
Okay, all right. Market breakout, that is what we are waiting for. But, we did see a cool off in gold ETF inflows. I mean, while we've been seeing precious metals hitting record highs day after day, even for today, that matter, silver prices have hit record highs. But looks like investors have
Very true.
turned cautious. Do you think the trend could remain the same? And what's your outlook for gold?
Well, personally, if you ask me, I'm very bullish on the commodities, specifically silver, followed by gold and then copper, because the commodity run is not like your equity run. Equity runs are in a cycle of 3 to 4 years, whereas if you have to understand the commodity run, you need to go back all the way to 1970. Historically, we have had two commodities run, and this is the third one. One we had in 1970, which was the Richard Nixon one, and in 2000 to 2002. Commodity cycles are generally longer than the equity cycles, and they are more steeper and faster than the equity cycle. Now, if you look at gold and silver, you see, you're right. Retailers are not buying gold and silver. Everybody is talking about gold and silver. Nobody is really buying gold and silver. If you ask people, everybody is on a selling spree. Everybody is like gold and silver is on the record high. We want to sell. But if you dive deep into what is the reason for the gold and silver running, it is China. China has been a big, big, big buyer of gold and silver. And also, if you look, we have a physical shortage right now. Every bull run of commodity that I spoke about, 1970, where the gold was not pegged to dollar anymore, that was the reason for that. If you look at 2000 to 2010, it was the quantitative easing and the Europe not playing out in favor. That is the reason why we saw running gold and silver. The reason for this run in gold and silver, the third bull run, is because of the physical shortage that is happening around. China is stocking out all the silver from London and Right now, we have massive paper shorts open on comments. And all the moves that you're seeing around is right now the short covering that is happening. And even if you look at silver, okay, silver is getting consumed more than it is getting produced. So the demand is more than the supply, and we have been in a shortage for a very long time. So now finally the vaults are draining. The physical metal that we had is draining, and I think this is the reason for the short squeeze that is happening. So I think gold and silver is going to do really good from here. And with China aiming to regain power and stand in front of US, it is not going to stop accumulating the gold and silver. So I think even if you look at the vault data from China, the SG data that comes in, China has been on a spree of buying gold and silver, and not China. It's India, it's South Korea. All the global central banks are buying, and this rally that you see in gold and silver is not backed by the retail buying, as you mentioned that the ETFs are not seeing any. So this rally is more backed by central banks and institution-driven buying. The retail FOMO is yet to come, and I think that is going to sustain here for some time.
Okay, it will sustain here for some time. That's your view on this particular precious metals. All right, on that note, we have to let you go, Harshal, but thank you so much for joining and connecting with us.
Thank you so much. It was really great. Thank you. Have a good day.